So now that we've looked at chart patterns as well as the importance of volumes, trading small caps and mid caps on technicals is best understood via examples. So what we'll do right now is try to look at as many examples as possible, because that will give you a very simple connect in terms of how to look at it in the real time. So what we'll do is we'll start off with a lot of examples along with volumes. Then we'll also look at failure patterns wherein it has not worked, right? And then we'll also look at some charts which are basically before and after, wherein you can see the chart as it was before the breakout and what happens post the breakout. So let me start off with the first example in front of you on the screen. So this is Birlasoft. Now if you look at it, it's been a nice uptrend from this March 20. It has continued in this uptrend and there are multiple opportunities out here as well. So out here, if you look at it, the first formation is, you could call it an ascending triangle, or you could call it a much more, it's a consolidation, contraction. You want to call it an ascending triangle, a channel flag, it's your choice. But in both the cases, what you can clearly see is whatever you name the pattern, the breakout is clear. You can see this volume bump up here before the breakout, makes that move which is equivalent to the size of the last consolidation. Then again goes into a sideways channel where you can see the ping pong in this tight range, then gives a breakout, again makes a channeled move, right? So this is a nice rectangle channel. Then you go into an slightly sloping upward channel, gives a breakout and continues in the trend. So out here there are multiple opportunities in this trend. So the stock went up from 150 to 550, but there were 3 times where you could trade the breakouts, and every time on the breakout you can see this jump in volumes. Then on the way down, it continued into a downtrend, which was also much more clear. Higher tops and higher bottoms became lower tops and lower bottoms. So this is one example. Then we take another example of a large cap company, just to make it easier that the patterns work across small caps as well as large cap. So if you look at it, this is a chart for Bharti Airtel. This you could call it a cup and handle pattern as well as multi-year highs. So it's a huge formation, and the high cross in 2021 was the high back in 2021 as well as in 2020, very close to it in 2018 as well as in 2007-8. So this was almost a 12 to 13 year breakout. So when the breakout happened, the target which is expected roughly came very close to it recently. We are still in that uptrend. But the point is, if it's a 13-year breakout, you'll have to give it 1 to 3 years at least to play out. So this was Bharti Airtel. Then we look at a similar cup and handle, but in a small cap company called Safari Industries. Now if you see, classically the stock topped out here in 2018, did a very deep correction all the way from 2018 to 2020, went back to the same highs in 2022, took a little dip. So basically the stock was at 1000 plus levels, went down to almost 300, 400, made a recovery to again 1000, then dipped back to 800, then back to 1000 levels. Now, when we look at this example, what does it tell you is, why does cup and handle actually work? Is because there are very few small cap companies which actually come back after a 30, 40, 50, 60, 70% fall. Many companies go into oblivion. So the ones which survive and thrive and come back to the same prices implies there has been a fundamental change also in the company, or there has been a cycle which has been digested. So there are market cycles, there are sectoral cycles which lead to such falls also, and this company has survived all those tough periods, right? For example, Safari Industries is into luggage, very similar to VIP industry. So it went through a tough phase because of valuations followed by COVID crisis, and this was a company which survived the whole collapse in COVID. Now, once it breaks out, a very simple calculation would be what? 1000 by 300, 400 down, so it is 700, 800 points. So target price is closer to 1800. The stock went from 1000 to 1800 in less than a few months, right? So this is what happens in cup and handles, and it is still in an uptrend. So it's a 80% move in less than few months, and a nice steady move. And on the breakout, you'll also see volumes here. So a classical cup and handle formation, how many years did it take? It was almost 3 to 4 years. The targets got done in less than 6 months, like I said, in that 30% time frame. Then we take another example of a cup and handle, which is Wonderla. Again, the stock fell in 2020, fell from say 250, 300 all the way down to 100 levels, made a recovery, made multiple handles here, and it kept on contracting and testing that same breakout point at 250 odd levels. So ideally in this case also, what would be your target? 250 minus 100 or 300 minus the lowest point, and you would have a 150, 200 pointer target. The stock went from 250 to 400 in less than 3-4 months. And when you see this chart, when I take you to the next chart, you will see the impact of volumes in actual numbers, right? So this is the formation. We take a little closer look at the chart in the near term data. So this is a little longer term chart for the last 2 years. We take it a little closer to what happened in the last 6 months to 12 months. Now look at the volume jump. Basically between February 2022 to July, August, it was trading 1 to 2 lakh shares. On the breakout, the volumes were almost at peak, almost 37 lakh shares. So that is, it went from 1 to 2 lakhs to 5 lakh shares to 10 lakh shares, and at peak almost 37 lakh shares. So this is what gives you a very strong indication that the breakout followed with volumes, and you got this first initial entry here at 250 to 270, and the stock peaked out at 440, 450. And if you see, it is August, September, October, roughly less than 3 months. So that's a huge move in a short period of time. And that is why it is interesting to be able to get into small caps. If you know when to get into small caps and how you can do it, if you get the pattern right, you can get a huge amount of upside in a very short period of time. So in this case, can you see the huge volume change as well as a technical chart pattern breakout? Then we look at a much smaller example of a chart which is much more smaller in time frame. So this is a company called Rico Auto. Now in this we are looking at a little smaller, but if you look at the same chart, you would call it a cup and handle also. But if you look at the recent time frame, you could call it a triangle or a pennant. It is less than 3 months in formation. But look at this volume change on the breakout. It is almost a 5x volume change. When you look at it closer, you can clearly see a pennant or a triangle out here. The range is very, very contracted. And see the volume change. Normally would be 5 to 15 lakh shares. During the breakout, it started trading 80 lakh shares, right? So this is your advantage. You get a chart pattern breakout followed by huge volumes. What does it indicate? Somebody has taken a big bet and we are piggybacking. Now it is not somebody, it could be some various HNIs, institutions, etc. But there is a huge change in volume, so there is huge change in participation. And this is your timing. So at many a times, you would be very, very early into the move because you just catch it on the first candle or the second candle of breakout itself, which is in this case if you see this circle out here. Now let us take some more examples. So what I am trying to do with examples out here is to take you through converting chart patterns to an actual trade which happens. Now what is the ideal criteria? Chart pattern breakout with volumes. If that happens, your hit rates are going to be very, very high. Now look at this example. So this is a rectangle, or you could call it a sideways channel for a stock called Bharat Electronics. Not a extreme small cap, but a decent enough mid cap to large cap. Now again, can you see multiple bottoms around the same prices, multiple tops around the same prices? Then it breaks out. Now look at this case, pretty huge volumes, almost the channel target got done. Then consolidated, formed a triangle, classical symmetrical triangle. Now a symmetrical triangle can break out on either side. So what do you need for a confirmation? A volume uptick with the breakout day. So in this case, if you see this candle, you can see this. This is the breakout candle and this is the volume tick. It is clearly evident that the volumes are almost 3x to 5x. Now once you go deeper, you will be able to look into the chart and say it was X volume and on this day it is 5x. But visually it is very clear that the price has broken out as the volumes have also broken out. The stock went from 80 to 110 in less than 3 months. Then again it was forming a triangle, symmetrical triangle formation. But right now, currently the stock is still around these prices out here. But the volumes were not there. So the stock has gone sideways in the current move. So what do you need to look out for triangles? Volumes. So out here volumes are great, it broke out. Out here no volumes, the stock has not gone anywhere. Now we take another example of a small cap company called Gravita India. What is interesting in this case? It's a classical cup and handle formation. Why do I say classical? Because the tops are almost the same. What is not classical? A top is at 100, another is at 95, another is at 93, a mildly sloping one, a mildly upward sloping. Out here it is as flat as it can be. So the top here in February 2022 closer to that 390 mark. October 2022 390 mark. Takes a dip to 330, 340, again goes back to 390, gives a breakout. Look at the change in volumes. And what happens to the stock? Quickly moves up from 390 to 470 in less than 6 sessions, right? And this is a very recent example. And all through this movement, the markets were not in a very solid uptrend, and still the stock did really well. So a classical cup and handle formation, a good 20% move, and it could still be in a long-term uptrend. But again, you'll notice this change visually itself when you're looking at volumes. You don't even need to go exactly into the volumes. A visual change is enough. A good 2x, 3x volume bump up from the normal volumes is your first indication, and then it should keep on increasing in the first 2-3 sessions. Post that, the volumes will not increase, because if the stock has gone up from 400 to 500, the same amount of shares being traded implies a 20% more value for the volumes. So you will see a big bump up on volumes in the initial breakout, and then after that you will not see a similar volume because the stock is up 20-50%. So value wise, the volume has already increased, even though the number of shares which we look at in charts may not be similar. Now to again go to an example which is where the largest company of India. The reason I am taking a mix of small caps as well as large caps to tell you the logic is pretty similar. Also the fact that volumes are important not just in small caps but even in large caps. It may not be as relevant in large caps, but it is extremely important in small caps. So look at this example. You could call this a small sloping cup and handle for Reliance Industries, and this was also a multi-year high. Now look at this case, the stock breaks out. The general volume for Reliance Industries at this point of time in 2017 was 65 lakh shares. But on the day of the breakout, 5.8 crore shares. So almost a 10x volume jump up. What happens to the stock? The stock is also a breakout on a multi-year time frame. So from 2009 till 2017, the stock on an adjusted basis had not crossed that 550 mark, adjusted for bonus split, 500, 550 when it broke out. Now look at this, 10 to 12 years of breakout, so the next 2-3 years have to be good. The stock went up in this trend itself from 500, 550 to 1300, then eventually to 1600. So the largest company of India, largest volumes, a long-term time frame breakout, and see the results. Right. So this example tells you it works across market caps. Then we look at a little older example of Aarti Industries. Now this is a very old example. This goes back to 2014. This company had been into existence for a long period of time. It was there from the 1990s, had gone nowhere for a very long period of time. But out here on the shorter term time frame, first we look at it, a classical cup and handle, the same tops around 53 levels. Again, extremely flat in terms of tops, gives a breakout. After the breakout, it consolidates for a few days, but the volumes, can you see the volume change? This gives you a classical example of how the volumes are very, very important and how somebody has taken a very large bet for a large time frame. So the normal volumes for this company used to be less than 50,000 shares. On the breakout day, 6 lakh shares. Continues to do 6 lakh shares for a couple of sessions, then consolidates for at least 5-6 sessions, then does a volume of almost 11 lakh shares. And this volumes are consistently higher for a period of almost weeks together. What happened to the stock? From 53, 55, the first move itself without much correction was 120 rupees. Less than 6 months for the stock to double. And this volume change was again 10x. So look at it, what happened? The next move it was 160. But when you look at a little longer term time frame, you just realize what happens to certain small caps. So this was a breakout on a 20-year time scale from 1990s to 2014. The stock went from 50 rupees to almost 1000 rupees over the next few years. So generally what we see is when huge volumes and price action has happened on a breakout zone, on a small cap, implies somebody has taken a larger bet and actually plays out over a period of time as well. Some may play out, some may not play out, but if you get few of them right, the moves are insane. So out here, the stock went from 50 to 1000, even if you capture 55 to 120 is a superb trade as well as an investment, capture it to 400, amazing. So the whole process to learn technicals and mix it together with everything else is to get at least some very huge winners. Now another example of a classical cup and handle, Escorts, a company which used to be in the major indices 20 years back, did nothing for the next 20 years. In 2014-15, the stock gives a breakout, a shorter term cup and handle here at 175, 180. Then the huge volume change, if you see on this chart, the volume change is so huge that we better focus on the extreme shorter term charts to see the difference. So average volumes 10 to 20 lakh shares. On the breakout day, 215 lakh shares, almost a 10 to 20x jump up on volumes. What happens to the stock? Goes from 200 to 400 in that move itself, then corrects with the market, then eventually goes up to 1000 rupees. So what you'll notice is cup and handle breakouts, even though on a 1 year time scale, on a 2 year time scale, mixed up with a multi-year breakout implies it's a multi-year trend. We saw that example in a Reliance Industries or a Aarti or an Escorts. Now these are companies which will go through phases of from being unknown to becoming totally known. So Aarti Industries went from being a commodity chemical company to a specialty chemical company which is tracked by all institutions today. Then we take another example, another classical cup and handle. So you saw it with Aarti, we'll take another example which is a chemical company again. So that is Atul Limited, a classical 450 to 480 price point in 2013, the same price point in end of 2013, the same price point in April 2014. So a good 1.5 year spent, classical cup and handle formation, huge breakout above that 450, 500 mark. Volumes initially improved, then the volumes went up crazily. So in this case, the volumes went from 30,000 shares to 1.5 lakh shares to 37 lakh shares, right? So that is huge in terms of the change. Right, so it used to be 30,000 shares, then became 1.5 lakh, roughly being the range, and then just blowing up in a big way. The stock went from 450, 500 to 1400 in less than 6 months. And then post that, the stock went up to almost 8,000 to 9,000, giving you multiple opportunities all through if you were to look at chart patterns again. So again, sideways consolidation, again cup and handle, again channel breakouts, and this is how you catch the trend. One more example, again that was chemicals, then this is a company called in agrochemicals. A nice sloping cup and handle breakout, a very tight consolidation here, average volume 2-3,000 shares, becomes 37,000 shares on the first breakout, goes up 20, 25, 30%, goes up from 1100 to 1500, makes a flag formation here. Again a volume bump up, now on this breakout is 63,000 shares, again goes up 20%, does a retest, makes a channel move and continues. And eventually Bharat Rasayan went from 1100 to almost 8,000 rupees in this trend, and it gave you multiple opportunities. So the reason we look at cup and handles, one, followed with multi-year highs, followed with an all-time high is, these are trends which are very, very long-term in nature. We'll catch it early, we'll ride it early. The learning going forward for everyone has to be how to enhance the returns in terms of capturing. So you've caught it early, you've rode the first move, how do you ride it on the longer term and also take opportunities going forward also into such trends. Because when you see very large price volume breakouts, that could be chances that these are companies which are getting into a multi-year trends. So this was an example of Bharat Rasayan. Now we are done with a lot of positive examples, right? So we want to see something what happens on the downside in terms of volumes as well. Alright, so that is where I take the next example, how volumes could also be an indication of companies which could take a negative hit. So why volumes are also important on the downside. Just to change the topic a bit, we take such examples now. So the next example is a company called Diwan Housing Finance, which did really well, right? It went from 100 rupees to 600 rupees, saw a lot of institutional action, HNI action. Then it topped out somewhere making almost the same tops. But on the day of fall, one of the days where it broke the last swing bottoms, it was down 55% in a day, closed almost 43% down. the volumes which used to be 70 lakhs to 1 crore on that day was 11 crores. So just like a large price volume breakout on the upside has impact, a large price volume breakdown on the downside also has a downside impact. Eventually the stock fell from 600 levels to first to 150, then another volume based sell off, then to 100, then eventually the company went to zero. So the stock got delisted and full capital was lost in this company. So what does it tell you? When you see a huge price downtick along with very, very huge volumes, 10x, 15x volumes, do not try and be adventurous. Do not buy that falling knife. It will kill you. It will kill your whole capital. Now, same example, a very renowned company which has a huge track record of giving returns as well as scale, a company called Divi's Labs, saw a huge volume downtick, a breakdown from the last swing lows. You could call this a ulta cup and handle, a inverse cup and handle. Normally 5 to 15 lakh shares. On the day of the breakdown, when it fell, it saw a volume of almost 1.3 crores. What happened to the stock? There was a FDA issue. Again it fell, and eventually this stock on this breakout from 1100 fell all the way to 500 levels. Now the problem is it is still a good company, it still has a strong track record, but this 1 year was terribly bad for the company, a 50% drawdown. Now the best part is a similar volume structure and a price breakout is seen when it reversed also. Many of the pharma companies did not reverse after this 2015 action of FDA on many companies. One of the first ones to do was Divi's Lab. So on the way up, again after this fall, the volumes reduced. On the way up, again you could call this a cup and handle breakout at around 750 levels. You see a 10x volume jump up and the stock again goes back into an uptrend. Then you get multiple opportunities similarly. So out here, after the breakdown, if you do not get a reversal signal, you are still out of the company. But if you get, the company could survive. And that has happened with very, very rare. So this is a rare instance of a company surviving such a downslot. Another example is a company called Yes Bank, which saw the initial from 300 to 170, almost a 20x volume jump up, went back to almost 280, 300 levels, but could not cross those highs, and there were multiple such volume sell-offs. The stock today has fallen all the way from 280 rupees to 20 rupees. But the fact is, even at 20 rupees, there has been so much of capital being put into the company by recapitalization. The market cap is at 60,000-70,000 crores. The peak market cap was 90,000 crores. So you will never recover your money back because it cannot become the largest company in India. So it will not go up back to 400, whatever happens, because it may not be the largest bank in India, even in the very far future as well. So even though the price has come down to 20, just to make this company survive, there is so much of capital gone into it, right? So what does it tell you? To sum it up in terms of volumes, you have to be very, very careful of huge price downticks with huge volume takes of almost 10x, 20x. On the opposite side, if you see a price breakout on cup and handle channel, a 10x volume, 20x volume uptick is a sign of a much larger long-term uptrends.